Okay, quick look at the charts. We've been obviously in this kind of very bearish market. Let's see here. We bottomed out. Where did we bottom out at? We bottomed down 24%. I was thinking it was a little less than that, but 24%. But currently, if I come from where we are now, we are down 12.5%. So, big comeback so far. A couple of things technically that we've looked at is, I think the whole world is trying to decide if we've reached the bottom or if there's more to go. And of course, we don't have any idea. But a couple of things I think that I'm watching, I think a lot of people are watching, are we broke out of this channel. We talked about that being bullish. We said, the market doesn't go straight up. So it kind of, it took a little pause here and then here. And this may just be another pause and we might go up from here. It certainly wouldn't be unusual to see that kind of a pattern. The two sort of, I guess, lines in the sand, if you will, one of them is this 200-day moving average, and you can see we bounced right off of it. This is, there's no magic to it, I don't think. I think it's just something that a lot of people watch. And so because a lot of people watch it and many people trade off of it, I think it sort of becomes a self-fulfilling prophecy that when we reach that point, some sellers came in and said, no, we're not going to break it, and sold off a little bit. Conversely, we have this yellow area, and I marked that last week. You would, if you go review the call from last week, or maybe you were on, you'll see that there's this area right, kind of in the sort of 4150 area, but I always think of support and resistance area as zones, not specific lines. And you can kind of see that, here there was this first touches, well, actually two touches here, then we went up, then we came down and hit it again. And then over here, it clearly played more of a support role again. But eventually we broke through it. And when you break through support, it often becomes resistance. And so you see that we came back up to it. And you can sort of see how for long periods of time, we stall out in this area. And what that tells me is that, buyers and sellers are kind of in equilibrium. They can't decide, there's some buyers come in, some sellers come in. And the way these markets move, and I think we've talked about this enough that you guys probably know this, is that what happens, like if you get a topping pattern like this, the market goes up and suddenly there becomes more sellers than buyers. A lot of the people are maybe profit taking, who knows why, but when this happens, clearly there's more sellers than buyers. And it's just like anything. It's like, the housing market. We've all witnessed all over the United States that right now, there's more buyers than sellers. A lot of people want to buy. Sellers are, getting whatever price they want. For a long time, I think it's shifting a little bit now, but for a couple of years now, we've been seeing things come in over asking price and those kind of dynamics. And that's because there's a lot of people that want something, and not very many people are selling it. And so the same thing happens in the stock market. When you have a lot of people that want something, or in this case, when you have very few people that want it, I think what you have is you have a lot of people that want to get rid of it at this price. They're thinking this is a really good price to sell, and but they have to start bidding the price down because there aren't enough buyers. So that's kind of the way markets work, is they're sort of auction houses. So they when buyers and sellers are in equilibrium, though, you see stall points like this. You see a bunch of sellers come in, sell it down. All of a sudden buyers think, well, no, I think that's still a good price. Sellers come in, especially with these big bars like this. But anyway, you can see that this yellow area has acted as support and resistance quite a few times. Here, the same thing. Now, I mentioned here we stalled and then we punched through it and then it became resistance, and that's a normal pattern, happens a lot. You can go back in time and you can see that. Same thing happened here. It acted as resistance, and you see we hung out in this area for a week, and then we punched through it. And then once again, now I said that last week, I think, let's see what day, this is the day right here we were on last week, the 18th. So I said last week, it wouldn't surprise me at all if we came back down into this yellow zone, and that's what's happened. Now, I don't have any idea if we're going to, just drop below it, or if we're going to go, up from here. And that's why I say this, we're kind of trapped between this 200-day moving average and this yellow support zone. So it's going to be interesting to see what happens. If I were betting, I would guess we're probably going to find support here and maybe creep up a little bit. We might hang out in this area for a while. But, there seems to be, again, if you just look historically at the last few months, this seems to be an important area that we're playing in right now. Sure enough, at least for the last couple of days, we found some support there, and that's kind of what I expected. Which is why, by the way, I entered the trade that we're going to look at today right in this area. And I say all the time that I don't trade off of these things. I really trade off the EWS signal. But the reality is there are some discretionary calls that we can make from time to time, and I sometimes do that. This is a good example of one. We had a big down day on Friday, and I felt pretty strong that we were going to come down at least to this yellow zone. So I could have entered, but nobody's forcing me to enter. So I waited till we had the next down day, which was Monday. That's when I put this on, and I know Mike sent the recording out and posted it and everything, but you'll see that trade was entered right, near the end of the day on this one. So there is some discretion that sometimes comes into these. Now, what if I was wrong? And I've been wrong plenty of times. Well, we have a plan, right? We know exactly what we're going to do. If the market moves against us, we have, we've got a plan for managing our deltas and keeping things in line. So I'm not worried about if I was wrong, but if you can just be right once in a while, just tip the odds a little bit in your favor, and maybe instead of 7 out of 10 winners, you get 8 out of 10 winners, just because you get a little better at technical analysis. It'll make a huge difference in your long-term results. So that's kind of what I'm seeing right now. I'm sort of thinking we're finding support here. I still think this 200-day moving average has to be breached before we can officially say we're out of this bearish market, and we'll see what happens. We could just as easily go the other way and get pushed down by that, but we'll see. Okay. So let's jump back over here.